Good morning, you're watching Business World Live. I'm DANIE LAUREL.
And I'm Jess Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Banco Central is inclined to keep interest rates low until the end of 2022 to help the economy fully recover from the downturn brought by the pandemic. BSP Governor Ben Jokno told Bloomberg TV that the central bank continues to have monetary space available even after slashing a total of 200 basis points in rates this year. Jokno says that the Monetary Board has made the decision to keep rates at present level until the domestic GDP has posted a growth of up to 7.5% and unemployment is down to the 5% range. Jokno says an accommodative monetary policy paired with fiscal policy is needed to accelerate the economy's transition toward a sustainable recovery. Jokno is optimistic that the recovery will start as early as first quarter next year. The overnight reverse repurchase rate currently stands at 2%, while lending is at 2.5% and deposit facilities at 1.5%. The economy slumped 11.5% in the third quarter, bringing the contraction to 10% in the 9 months to September. All right, Dan, the peso, of course, has benefited from the central bank's easing stance. Let's do one last check on that before the holiday spending surge.
Okay, Jess, usually when there's holiday spending, it's also benefiting the peso. So much demand for our currency here. Daming taong gumagastos. But anyway, take a look at my terminal here. You can see the basket of Asia. We used to be top one, actually. But now we're still not that bad. We are the fourth spot in the rest of Asia when it comes to the strength of our currency. And we are rather up by 5.4% for the year. So we're actually still stronger than safe haven currencies like the Japanese yen and even Singapore and South Korea. So pretty interesting play for the peso. I just want to take out the graph for you so we can see where we are trading at this morning. I'm not too sure actually whether trading for the currency will be continuing over the holidays. Probably not. But you can see that we are now inching our way towards the 47 levels to the greenback, 48 spot 060. So strengthening pa ahead of the holidays. So let's see whether we can actually reach those levels. Some have actually a target of 46 by next year and some at 47 spot 5 by the end of December. So malapit na tayo dyan. Now let's take a step back and just see how global markets have been performing. Now yesterday we saw the overnight in Wall Street pretty bleak, but you can see now a bit of a mixed picture with the Nasdaq up by 0.5%, but the two other indices, the Dow Jones and S&P 500, not necessarily enjoying a recovery there. But finally, Europe, after having seen a sea of red the day prior, recall that we had reported on the new strain of COVID-19 after that vaccination program over in the UK. Just some news on that from our front. The Philippines has now banned all passengers coming from the UK for a certain period. So that's from December 24 for a few days at least until more clarity on the issue comes out. But you can see a bit of a rebound now in European stocks. But let's take a quick peek at Asia and how markets are trading over here. You can see Japan staging a bit of a mixed opening, not too steady here. Topix down by 0.15%. The rest that are open right now, Taiwan is also in the red, but Kospi is up by 0.2%. So a little bit of uncertainty in terms of what's going on in the rest of Asia. One thing to be mentioned here, this is from Joanne Feeney. She's a partner at Advisors Capital Management. She said on Bloomberg TV that a lot of the good news of the vaccine has already been digested. So even the stimulus bill in the US, so a lot of this flattening on the market just reflects how much already the good news has been digested. So a lot of things are going on, but not a lot of optimism ahead of the holidays. Now let's take a quick peek at our own index. Recall that yesterday we were down by 0.3%, but we were still keeping our heads at 7,200. Now we're down again. This was quite expected and called by some analysts. Actually, we're down by 0.8%. Phil Sachs was saying that yesterday there were so many worries about that vaccine, the COVID-19 strain in Britain, the new one. Timson Securities says that people are comfortable staying on the sidelines with the holidays. They might be profit taking, but nevertheless, quite strong trades yesterday, above 10 billion pesos in terms of value turnover. So just a quick peek at our biggest movers this morning, and whether you actually have some bright spots that are not being sold off. Unfortunately, Jess, you can see in my terminal here, just one. It just seems to be a Boytis Power in the green at this moment, up by 0.9%. And if my eyes aren't deceiving me, everyone else is in the red. Metro Bank, for instance, dragged down by 2.2%. Security Bank as well. So interesting that the banks are reacting to the statement of central bank governor, possibly on keeping those rates quite low. Now, I just want to mention a couple of stocks I wanted to be looking at here, starting with Ayala Corp. They have actually said that their healthcare unit, through Healthway Philippines, has now acquired a controlling stake in Mercado General Hospital. So this Mercado General Hospital actually owns QualiMed Health Network. So recall that this has been part of their plans naman. They've been wanting to acquire more healthcare facilities. So that will now bring AC Health to having 4 general hospitals and about 85 outpatient clinics and 80 corporate clinics. So it's quite big. I recall that they also wanted to do this first cancer facility. They've been very active in the COVID fight. They've had around 30,000 COVID patients na and have performed around 82,000 COVID tests. Now, also on the news are the telcos. So I'm just going to take a quick peek at that. We've actually got them giving some commitments, at least for the next year, and saying that they're going to be improving their capabilities. You've got Globe. They want to be fast tracking the cell tower installations in 24 more LGUs. Target is 2,000 cell towers next year. They said that they did 1,050 this year in terms of cell sites. And you've got PLDT saying now they want to reach 48% of the total cities and municipalities, and that they actually have now 10,000 sites. That's for smart. Even with the mobility restrictions, they put up 700 new cell sites. And finally, sorry, medyo mahaba, but just one last that I wanted to check before, of course, we all go on holidays here. Petron, you've actually got them having decided to close their Bataan refinery, so just one of 2 refineries in this country. And this from the DOE Secretary Cusi. He says they respect the decision of Petron to close the Bataan refinery. So he says that, he's actually looking at supporting Petron's proposal to turn the refinery into a special PEZA zone. So very interesting pivot here for Petron that is also trading in the red at the open. Now let's go back to your vaccine talks. Jess's vaccine saga far from over, and we're all sana looking forward to these deals, especially for the new year. But the reality is that it's going to be quite difficult logistically getting the shots here. So how much of a challenge is it going to be?
Okay, if you thought that acquiring these shots are going to be a challenge, especially for developing countries like the Philippines, well, it's going to be doubly hard for our archipelago like the country. At the same time, you have to consider our climate. It's going to be really an uphill climb for us to actually store and distribute these vaccines once they are available. But to give you an update, of course, on the vaccine talks here, last Monday night, during the president's weekly address, you have vaccine czar Carlito Galvez saying, they are expecting the 60 million doses of vaccines to be available by the second quarter and the third quarter of 2021. I mean, they're already in talks with other sources here. We do know, of course, that we are expecting 25 million doses from Sinovac. That is expected at least in the first quarter of next year. But, there are other sources. Private sector, of course, already tapping AstraZeneca. They're saying that's going to be cheaper, considering that they have a no-profit, no-loss system. At the same time, Carlito Galvez did say, that they are expecting discussions with India's Novavax to actually start by as early as next week. So, a lot of things when it comes to vaccine procurement here. But yes, of course, should all these talks come to fruition, question is, do we have enough arsenal to actually store and distribute these vaccines? So we're not just talking about facilities here. For one, you also have to consider, do we have enough manpower as well to actually facilitate mass inoculation? But you know what? More to the facility side here, varying vaccines require varying temperatures, and according, of course, to Health Undersecretary Maria Rosario Barjere, that's going to be a tedious task. If it cannot be delivered, then vaccination, according to her, has to be done in facilities. But let's face it, access to facilities will actually be the next challenge when you try to think of that. But according to Vergere as well, government already has freezers for vaccines that can be stored at temperatures of 2 to 8 degrees Celsius. However, there are, of course, shots here being developed that actually require even colder temperatures here, and that's where the private firms are actually going to step in. According to her, there are already private partners which are willing to convert their freezers to accommodate vaccines that actually require negative 20 degrees Celsius. In fact, you have two private suppliers already committed to set up freezers that can accommodate to as much as negative 70 to negative 80 degrees Celsius. Now you have, of course, Janet Hakusalem. She is a chief business officer of Zwellig Pharma. According to them, they are already ramping up their storage capacity. According to her as well, their facilities can handle various temperature needs from warehouses to delivery. Of course, they do have quite portfolio here of warehouses. They have one in Parañaque as well as in Cebu, Santa Rosa, and Davao. So quite a lot of areas covered there. According to her as well, they might actually partner as well with Air 21 to go and third-party truckers for transportation of the vaccines. Now, to ensure as well the temperature requirements are met while vaccines are in transit, they are going to use special coolers. That, of course, is going to be a very risky task, Dan, because vaccines can have a different effect if they are mishandled. That's why it's a very crucial, of course, that you try to maintain the temperature requirements even during transit. In fact, you have other private firms that are already at least looking to help. You have the likes of DHL, UPS, and even Airspeed there. According to them, there's space for private involvement when you're talking about distribution of vaccines. And that's no longer about competition. It's about ensuring that the right thing is done, especially when you're talking about vaccinating majority of the population. But Dan, we have one other challenge here: public resistance to vaccines. Once the vaccines are available, you now have to convince the people to actually get the shots. The last survey released by the SWS back in November shows that only 66% of Filipinos are actually willing to get vaccinated. Well, that pretty much is going to meet somehow the herd immunity requirement of 60 to 70%. Still, you have to consider the fact that 31% are still unwilling to get vaccinated. So that's something, a campaign that, of course, the government has to really keep an eye on to ensure that, a lot of Filipinos will actually be willing to get the jabs.
Well, let's see whether President Duterte will be doing that on cam like the other leaders in other countries have been doing. Just a quick peek on our cases here. 1,310 is the last sprint. Recall that other analysts have been looking at an increase of around 4,000 daily cases during this holiday season. So a lot to still be watching out for just on the vaccine front. Now we'll be taking a quick break, but we'll have more on the news when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess Delos Santos. Taxpayers now have until June next year to apply for the government's amnesty program to settle delinquencies in their tax dues. The Bureau of Internal Revenue extends the program's deadline for a fourth time since April to accommodate taxpayers having challenges applying this pandemic. The Bureau says the tax amnesty program for delinquent payments generated 3.5 billion pesos in revenues since it was launched in April of last year. The BIR moved the deadline for the availment of the voluntary assessment and payment program likewise to June 2021. As of end May, the BIR collected 2.5 billion pesos from the tax amnesty program for delinquent accounts. Now, public-private funded infrastructure projects increased to 233, with 14 new projects this year, according to the PPP Center of the Philippines. The total estimated cost is now over 8 trillion pesos. Out of these projects, 176 worth 1.3 trillion pesos are currently being implemented, while 57 projects are in the pipeline. The 14 additional projects, meanwhile, consist of 5 solicited projects, including the redevelopment of Netas Makati property, and 7 unsolicited projects, mostly centered on airports and seaports in Visayas and Mindanao. The projects are currently in various stages of development, evaluation, and approval. Socioeconomic Planning Acting Secretary Carl Kendrick Chua says the government is open to more PPPs as alternative funding option for infra projects with government revenue strained by the pandemic.
The country's economic recovery is expected to be W-shaped in 2021. This means the economy is seen to have an unsteady pattern of advances and declines in the coming year. BPI lead economist Juneri noted that the Philippines may lag behind its ASEAN neighbors if its fiscal response remains too conservative. The peso, though, is likely to strengthen while interest rates will rise, but Neri said both movements will be gradual and manageable. The economist adds that inflation risk will remain low, but supply disruptions need to be watched closely. The 4.5 trillion peso national budget, which contains many economy-stimulating provisions, is now awaiting President Duterte's signature. Now, for those of us still working and watching the markets, Christmas cannot come soon enough. But if you take a trip to the malls, you'll forget all about the lockdown with the holiday rush. Now, here with us for our last broadcast before the holidays, we have Ed Francisco, President of BDO Capital. Good morning, sir, and welcome.
Good morning, Danny.
Sir, if you go to the malls, as I just did yesterday, it really feels like the economy has just picked up during the season. But it doesn't appear to be spilling over to the markets when you take a quick peek at the so-called Christmas rally. Some have said tapos na the Christmas rally. Some have said that it could have had more steam to go, but that was derailed, so to speak, and there are downside risks. Is this it? Is this the highest that we can go now, at least for the end of the year?
Yeah, I guess with 3 days left, Danny, baka nga this is where we will be. It's likely that there's a possibility we'll still reach 7.2 by Tuesday, by the 29th, last trading day, I guess as we close the books. But as you guys said, the people have factored in already the virus. At least we're seeing spending in the real economy, in the malls. We see the restaurants open. We see traffic bad again, which is a good sign also in a way. And then some of us, you and I, we have different travel plans, so at least we're making the most of it. I think it'll be okay because if you remember naman, we really went down significantly in March, April, May. So even closing at 7.172 is already a big achievement. And it's better that way rather than bumulusok masyado because the expectations for next year naman are going to be tough also. It'll be challenging to go back to 8,000.
Sir, we have some reports saying that we actually have room to go even higher than the 5-year PE forward multiples. Do you believe that might be the case? And they say that's because the foreign investors have not yet come back in. But then you've got another camp saying that they're not going to come back in if the valuations are that high, and it's actually due for a correction, and we might be heading back towards those levels that are our 5-year average. Or do you feel that we do have fundamental reason for foreigners to come back in even at these levels?
Okay. I guess the foreigners have taken a wait-and-see attitude till today. Our valuations might appear high as one of those camp people, the other camp is saying. So I guess the challenge is for our corporates to deliver. No, of course we're expecting a big loss in income or reduction in income this year. That's taken. Next year we expecting I think a 50% rebound in corporate earnings. This is BDO's securities. On the other hand, but I don't think it will even meet 2019. So if we're able to all get our act together and maybe the economy grows faster than planned, with the help also of the governor, BSP governor ensuring that rates stay low, then the investors will come in, income will go up, and when income goes up, the PE multiples will look cheap, and then that will be a parang snowball effect. So there's still a possibility. I guess the key, even us individuals, at this, while we are ensuring social distancing, we have to spend also this Christmas. If we spend, then that will make things positive, and that will show the bottom line. And then it's all so correlated. Higher income, higher PE, more foreign, higher index, and we all make money. So,
Sorry,
sana,
so
sana.
you're saying that it's all dependent on consumption really picking
Yes,
up, and
also.
confidence, and also business confidence also to expand on the back of consumption picking up. Can you say that let's say the virus, so to speak, is contained, and social distancing measures are in place as they are right now, that we can continue on this slow but steady and more sure path, compared, and it's nothing to do with our structural issues economically, and it's just to do with reopening the economy and the confidence of people to get out there and spend.
Again, Diba, remember also, a lot of people were very, I guess, disappointed or claiming to be disappointed with the longest lockdown of the government. But look what happened. We were very, very careful. And look at what happened to the UK. They have a major lockdown now. They're not even UK citizens are not allowed to fly to the Philippines. They cannot fly elsewhere to the rest of the country. So it just shows you being careful doesn't necessarily mean bad. Of course, now I just hope we can get our vaccines here. And I was listening intently to Jess's pitch earlier, or updates on what's happening. We hope that with the Conglos, our Taipans helping and donating to the government, it will accelerate the vaccine, and converting their freezers. That will really help, because the government is doing their share with infrastructure already, right, Danny? So it's really more the consumption spending talaga. And I'm very, very hopeful that once people are more comfortable, they will spend and maglalabasan.
Sir, without the additional fiscal stimulus, is that going to be happening? Especially since, Bayanihan 2 will be extended, but then the budget is not necessarily going to be bigger next year. It's just repurposed. You're just getting some stuff na from the infrastructure and putting it towards healthcare, which is not necessarily, the direct to the pockets of consumers. So to what extent can we have this recovery without an additional stimulus package, which Sec Dominguez is saying, ito na yun eh, tama na muna.
Yeah, no, that's medyo the tough part, right? Because admittedly, maybe the larger corporations have enough PC, diba? I mean, to survive. But you're right, some of our SMEs are really struggling, and that's why it's great that Bayanihan is extended. But then also, if we're not able to give support to the struggling small companies, and if they're not able to reopen, if they're forced to, I guess, retrench and close down, it's harder for them to come back in. So even kami as a bank, we hope we're trying to help them as much as we can, trying to restructure. Kasi we don't want them to close down, kasi that means parang nag-give up rin eh. And we think we're resilient enough to be able to recover. But you're right. So that's why we have to help, especially the smaller companies, the SMEs, the individual companies that are struggling. If we're able to help them off their feet, I think it will all also help everybody also.
Sir, do you think that this can be absorbed by the monetary easing? So the help to the SMEs, if for instance there's enough confidence to spend and enough confidence in the unemployment going down, that the amount of liquidity in the market available for loans might actually make up for an increase in fiscal.
Yun nga. And in fact, your Dr. Danny, I have to ask you. I'm not sure. No, I'm not sure nga kasi di ba, no matter how low interest rates are, but if people are, I guess, afraid to borrow or not able to reborrow, if there's no business plan, di ba, or not enough confidence from them to actually go to the bank or to borrow to expand, because they're afraid that how will I make money if I'm operating at X capacity, if I have to pay out this kind of overhead with these people, they might not open. So it's more, in fact, it should be the other kinds of subsidies rather than rates. Di ba? It's the other support that's really needed, and the CREATE bill and all these other bills, they have to be passed to support nga the other kinds of companies.
Okay, so it's there, but there's no catalyst to actually be using it.
Yeah.
Sir, what sectors are you most excited about in terms of a rebound? Let's go back to the stock market. So you said that we've seen a pretty good run up, especially in the month of November. We had properties staging a rebound now, but the others are still undervalued. You've still got the cyclical stocks there, not necessarily pulling in the weight. Why is that? Why is it not a broad-based economic recovery? Why is it just certain sectors that investors
Yeah.
are gazing in?
No, you're right, but this is not anymore a V shape or a L shape. It's really a K shape. There really are industries that are really having a big challenge. I guess airlines are one of them, right? But then the ones that have done extremely well are, I guess, telcos, broadband, Converge, PLDT, Globe, etc. Food, the Pure Golds, the Centuries, even SMB Pure Foods is doing well now. Their beer was hit for a while, but more because of the liquor ban. So those will do well. Properties, as you said, they will go back up. I think because they've been if the demand comes back in, that will do well. Parang if the pogos are out now, but the BPOs will continue in, we'll see recovery there. The banks, of course, have been hit badly. So there's a lot of upside there when they're able to, fix what has to be done. Uh, but you're right. The other industries, the tourism is still challenged. No, so we'll see. The airports will be challenging, but we hope something will happen with NAIA and of course Bulacan and even Cebu airports and Clark, because they have proxies in the stock market, so we're excited about them. And then the conglos, of course, are really there because they're a signal of the economy anyway. And I see them, they've recovered already, a lot of them, but I see more upside for them. So yeah, property, banks, I guess, food, of course, telcos are the strong ones. The other ones are a little scarier. No, I mean more challenges for them. Not necessarily scary, but more challenges. But I hope, of course, the rest of the other sectors come back up also.
And last question, sir, before we let you go for the holidays. Will 2021, you were mentioning about the rebound in corporate earnings. This is what needs to spur investors to come back in. Will we be seeing that in 2021, or will it be a restructuring year wherein the capex to be spent will really just be rebuilding what we've lost? Because when you look at the GDP figures, diba, even if we grow by 7% next year, that's nothing compared to what we've contracted this year. So will we be seeing the corporates this same sort of scenario, restructuring pa lang, and hindi pa full recovery?
Yeah, no, good point. Tama ka, di ba? Kasi even if you lost, let's say, 10%, even if you grow 7%, mathematically, you're not going to reach 2019 levels back. Now, if based on 2019 levels, if I was a corporate, if I had capacity for that, and I built for that capex, therefore, if my revenues are not going to even meet 2019, there's no need to expand my capex. There's no need to put bottling lines, additional trucks, additional distribution facilities. So you're right. It might be more restructuring, streamlining, optimizing, trying to save money there so that they can improve their margins. No need for huge capex. Some of them taking advantage of refinancing because of lower rates, which is fine, diba? Doing green issues. And then maybe already possibly also the ones with powder, because they have a war chest, they start acquiring land for or look at companies that have that need the partnership or as a foothold as they expand in 2022. So 2021, you're right, a little slow. There's gonna be growth, right? But maybe more refinancing, restructuring, fixing their balance sheet, fixing their long-term liabilities, so it's in tune with their long-term assets. But we're hopeful because that will restructure them, make them stronger for the succeeding years.
Okay, so managing expectations there, but as well focusing on specific sectors. So it's still about specific sector picking here, especially the ones that are poised to recover faster. Thank you so much for those insights. That was, of course, Video Capital's
Thank
President
you.
Francisco.
Merry
Happy
Christmas.
holidays.
Happy New Year. Bye-bye. Be safe.
Thank you, sir. That's a first look into the business day. Today is December 23, 2020. I'm Danny Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.